Viewing a flat or sideways market as optimistic or as a positive would normally be a bit odd, but given market returns over the last 9 months, I think most investors would probably be rather relieved if markets simply stopped going down for a bit. And despite a lot of continued negativity and a tough road ahead, it's not unrealistic to think it could happen. In fact, I'd argue that envisioning a market that is volatile, but ultimately ends the next quarter or subsequent quarters flat or close to it, is not unrealistic for several reasons. First is simply the fact that with markets falling as much as they have year to date, a lot of negativity and bad news is already incorporated into stock and bond prices. At some point or at some price, investor expectations become so negative or low that bad news basically stops negatively impacting markets. It's impossible to know when or if we've reached that point, but if things simply stop getting worse, that could be enough for markets to stabilize. Perhaps the strongest argument for a flat or sideways market, however, lies in the nature of some of the headwinds. Markets may always be anticipating or guessing at what may happen in the future, but those future data points still matter, and many of them are things that we can't possibly know with any confidence in the near term. For example, when the Fed or other central banks raise or lower rates, the impact of the economy and inflation happens with a considerable lag. The economy is likely only now starting to see the impact of some of the initial hikes from last spring. As a result, we may be far into 2023 before we really have any sense for what some of the larger, more recent rate hikes mean for either the economy or inflation. Not to mention the fact that it is unlikely the Fed is done hiking rates. Another example would be the fact that energy prices and supplies in Europe this winter are going to be at the mercy of Mother Nature. With Russia restricting supplies to the region, the threat of a harsh, cold winter looms large. We all know how difficult it is to predict the weather even a day or two in advance, so there isn't much we'll know with certainty for at least a few more months on that front. To sum it up, we'd expect there to be plenty of volatility under any scenario. But with valuations already discounting a lot of bad news and clarity on several important market drivers well out into the future, it's not altogether difficult or unreasonable to imagine a period of flat to sideways market movement as investors enter a bit of a wait and see mode.